Good afternoon. This is Chris Brecher with Simpler Trading / Chart Patterns Mastery free video. January 9th, 2024, brand new year in here. What are we watching? The first thing we're watching is things in relation to each other. Now, what are we talking about? There are two things. Number one is things in relation to each other. Number two, stocks with valid chart patterns that shrug off bad news. So let me show you what we're talking about. We'll start with the shrugging off bad news instance. Here is NVIDIA. So NVIDIA had lousy news Sunday night about chip stuff, and the stock opened up, not down. Once it opened up, it broke this old high. Then it had that bull flag and was off to the races. So nice. Microchip. Also, lower guidance. Stock refused to go lower. Opened down. Not here. We're talking about today. Opened all of 1 point down. If that's all it could do, if any of the other chips in the group sold off pre-opening, you got to buy them. If they only went down because of microchip and microchip came back, then they're going to go back up, which has to do with something like ADI. ADI rallied 3 points, so very exciting. So one, how things are reacting at the moment. To bad news. Later this month when you have earnings, I think it's going to be the opposite of how they react to good news. Just like Lululemon. Lululemon had good guidance, and guess what? Stock went down, not up. But it was already near a new high. You got the ADIs in the world weren't. So just keep that in mind. We'll be watching that into earnings at the beginning. Usually the earnings at the beginning are the ones I use as tells. So if you see good earnings of a stock near a new high, and it sells off, then other ones that are near their new high have good earnings. A lot of times we can play them to the downside afterwards, and we'll try that again. We'll try that at the end of this month. We'll see. We'll see which way to play them. We like to go on the first tranche of earnings, decide how to play the second tranche. The next thing I'm going to watch, though, is going to be things in relation to this 20 moving average. So we're going to go and I'm going to show you the studies. This 20 moving average has been working really well. The highlighted one. So what we're going to do in here is we're going to take off the ATR trailing stop. And I want to show you a number of indexes in relation to that red line. So on the right, I can just take the let's say the NASDAQ. We're going to take the NASDAQ and we're going to do the same darn thing. We're going to take on the right. We're going to take off the ATR trailing stop, even the MACD. I just want to show you this. So we're going to clear the drawing set. We're going to take the NASDAQ as a daily. There you go. There's that moving average. So when on the left, the ES reclaimed that 50 yesterday, while the NASDAQ was this far under it, to me it was a layup. The NASDAQ was going to have a rally, which it did. Now the problem now for bulls is you have the ES on the left and you have the NASDAQ on the right reclaiming the 20 moving average. I don't use these moving averages literally all the time. But a lot of times, it's a good, reliable way to play intraday moves. So go look at the Russell, though. Now, that has not reclaimed it. In fact, the way I'm looking at it, now I'm going to put it on multiple time frames. This Russell better hold this area. If this Russell can't hold this area, then to me, it's decisively going to break that 20 or get farther away from it, which is going to make it more likely that the NASDAQ and the ES are going to go back under it. The YM, another big one to watch. Guess what? It's over it. If that gets under it and the Russell stays under it and the bond market stays under it, then I think the probability of the NASDAQ and the ES staying above it goes down dramatically. So we're going to be watching extremely carefully the transports, which are under it decisively, the YM, which is over it, the Russell, which is under it, and the bond market under it. Now, keep in mind, the biggest wild card of them all in here is the bond market. Why am I mentioning that? As the CPI is on Thursday. If this doesn't hold on the right, that 4-hour bear flag, and this goes all the way to here, yeah, that's a big danger sign for the broad markets and the bulls. So take care. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.